What's shaking in the metaverse? Get ready for a rapid-fire download. Swiss banks are pushing deposit tokens forward. Figure technology is making waves on the public markets. A massive $1.5 billion is being poured into blockchain by giants like Alphabet, and we're diving deep into the design criteria for tokenized deposits. This is MetaVerse Update, and you don't want to miss this. Swiss banks, specifically the Swiss Bankers Association, PostFinance, Sygnum, and UBS, have just wrapped up successful tests for their Swiss franc deposit token. They're so impressed with the results, they're greenlighting further development, signaling a major leap for the future of payments in the financial center. We've got all the details on what this means for efficiency and security. Then, we're talking about Figure technology, led by former SoFi CEO Mike Cagney. This blockchain platform for financial services just had its IPO and is already showing massive potential, aiming to solve real-world problems in lending, not just chase crypto prices. We'll break down their innovative use of the provenance blockchain and how they're integrating AI to revolutionize consumer credit. And the blockchain buzz doesn't stop there. We're seeing a huge investment of $1.5 billion from Google's parent company, Alphabet, into 4 different blockchain companies, highlighting just how much big tech believes in this technology. Plus, we're getting an exclusive look at the critical design criteria for tokenized deposits. Stick around, because you'll want to know all this and more. Don't forget to like, subscribe, and hit that notification bell. Swiss banks double down on deposit tokens after promising tests. This is a massive step forward for the future of payments. Swiss banks have just completed a successful proof of concept for a Swiss franc deposit token, and the results are so compelling that they've decided to push ahead with further development. This initiative, spearheaded by the Swiss Bankers Association, SBA, PostFinance, Sygnum, and UBS, represents a significant stride for the innovation capabilities of the Swiss financial sector. Martin Hess, chief economist at the SBA, emphasized that this token is a strategic move towards modernizing the payment system. The project rigorously tested 2 key use cases: facilitating payments between customers of different banks and enabling a secure, automated asset exchange process. In both scenarios, the underlying technology proved robust, ensuring that the transactions were legally binding, compliant with all regulatory requirements, and upheld depositor protection standards. Alexander Thoma, head of digital assets at PostFinance, highlighted the potential for deposit tokens to make payment transactions more efficient and secure for everyone involved, confirming the legal viability of blockchain technology for these applications. Sygnum's deputy CEO, Thomas Eichenberger, echoed this sentiment, predicting lasting changes to the financial market and payment systems thanks to blockchain. Christoph Puer from UBS Group confirmed that the proof of concept demonstrated the feasibility of interoperating bank money via public blockchains. The next phase will involve refining the deposit token model and bringing more banks and regulatory bodies into the fold, with the ultimate goal of extending the benefits of blockchain-based payments to all Swiss bank customers. This builds on a growing trend, as seen with JP Morgan Chase's plans for its own deposit token, showcasing a broader industry shift towards tokenizing traditional financial assets. Public reaction has been overwhelmingly positive, with many in the financial community hailing it as a crucial innovation. Analysts are watching closely to see how this could reshape cross-border transactions and digital asset integration. The successful tests suggest a tangible move away from theoretical applications towards practical, regulated uses of blockchain in traditional finance. Don't go anywhere, because the implications for global finance are huge. Next up, we're exploring how blockchain is tackling real-world financial problems with a company that just hit the public markets. Figure Technology's public debut, Blockchain for Real-World Finance. Is blockchain finally moving beyond speculative assets to solve actual financial problems? Figure Technology Solutions, a blockchain platform focused on financial services, just made its public market debut with a successful IPO, raising nearly $787.5 million and seeing its stock jump over 24% on its first day. Co-founded by former SoFi CEO Mike Cagney, Figure isn't just chasing crypto valuations. It's leveraging blockchain to streamline consumer lending, starting with HELOCs and expanding into auto and small business loans. At its core, Figure utilizes its proprietary provenance blockchain, not public cryptocurrencies, to manage transactions. This allows for faster, cheaper, and more transparent loan origination, funding, and securitization. They've already facilitated over $16 billion in loans, demonstrating the power of blockchain to reduce intermediaries, akin to condensing a multi-party stock trade down to just two parties on the blockchain. The company is also integrating AI, using OpenAI's technology to enhance loan application evaluations. Figure generates revenue through loan origination, servicing fees, loan sales, and platform usage fees, essentially taking a share of the loan volume they facilitate. Financially, Figure is showing strong performance. For the first half of 2025, revenue hit $190.6 million, with net income reaching $29.1 million, a significant turnaround from the previous year. Their borrowers are prime, with average FICO scores above 750, indicating a solid credit profile. They facilitated nearly $6 billion in home equity lending in the 12 months ending June 30, 2025, a 29% increase year-over-year. With a market cap around $8 billion, the stock trades at about 20 times its run rate revenues, a high valuation, but potentially justified by its scalable, asset-light model and the massive $35 trillion U.S. home equity market. The market reaction has been enthusiastic, with investors seeing the potential for democratizing financial services. However, challenges remain, including evolving regulatory landscapes for blockchain-based lending and the inherent execution risks as they expand into new loan types. Macroeconomic factors like rising interest rates also pose a threat. But the excitement around blockchain investments doesn't end with Figure. Get ready for some massive corporate backing as we reveal which tech giant is pouring billions into blockchain startups. Alphabet fuels blockchain boom with $1.5 billion investment. Blockchain is officially an investment hotspot, and the latest proof comes from none other than Google's parent company, Alphabet. In a move that underscores the growing mainstream acceptance and potential of distributed ledger technology, Alphabet has reportedly invested a staggering $1.5 billion across 4 different blockchain companies. This injection of capital signals immense confidence from one of the world's largest tech conglomerates in the transformative power of blockchain beyond just cryptocurrencies. This significant investment highlights a broader trend of major corporations recognizing blockchain's utility in various sectors, from finance and supply chain management to digital identity and beyond. While the specific companies receiving Alphabet's investment haven't been fully disclosed, the sheer scale of the funding suggests a strategic focus on companies developing foundational blockchain infrastructure, innovative applications, or enterprise solutions. This move by Alphabet is expected to catalyze further investment in the blockchain space, encouraging other large enterprises to explore and adopt the technology more aggressively. The news has sent ripples through the crypto and tech communities, with many seeing it as a validation of blockchain's long-term potential. Industry analysts point out that such substantial corporate backing can accelerate development, foster innovation, and help overcome some of the adoption hurdles that blockchain technologies have faced. CoinDCX's Manisha Gupta noted the increasing popularity of blockchain, with 40 major companies now invested in the technology, further emphasizing this trend. And if that wasn't enough to get you excited about the future of digital assets, we're diving into the nitty-gritty of how these revolutionary tokens are actually designed, right after this. Designing the future, key criteria for tokenized deposits unpacked. As the financial world increasingly explores tokenization, understanding the core principles behind designing these new digital assets is crucial. This deep dive into the design criteria for tokenized deposits breaks down the essential elements required to build secure, efficient, and compliant digital representations of bank money. Tokenized deposits represent a fundamental shift, transforming traditional bank deposits into digital tokens on a blockchain. The design process must meticulously consider aspects like regulatory compliance, security protocols, interoperability with existing financial systems, and the user experience for both institutions and end users. Key criteria include ensuring that each token accurately reflects the underlying deposit value, maintaining robust anti-money laundering, AML, and Know Your Customer, KYC, procedures, and establishing clear governance frameworks for token issuance and management. Furthermore, the design must address scalability to handle high transaction volumes and resilience to ensure continuous operation. Experts emphasize that successful tokenized deposit systems will require close collaboration between financial institutions, technology providers, and regulators. The goal is to create a system that offers the benefits of blockchain, such as increased speed, reduced costs, and enhanced transparency, without compromising the stability and trust associated with traditional banking. This series aims to provide a comprehensive overview of these critical design considerations. That's a wrap on our deep dives for today. But before you go, stick around for a lightning-fast recap of all today's top stories and our full call to action. And that's a wrap on today's MetaVerse update. We saw Swiss banks pushing forward with deposit tokens, Figure technology making a splash in the public markets with blockchain-based lending, Alphabet injecting $1.5 billion into the blockchain ecosystem, and we got an inside look at tokenized deposit design. Don't miss out on the next big thing in the metaverse. Hit that like button, subscribe to MetaVerse Update for your daily dose of innovation, and ring that notification bell so you never miss an episode. Plus, let us know your thoughts in the comments below and follow us on all our social channels for more exclusive content.